Good morning, everyone, and thank you so much for joining this special webinar with WBEC. I'm Hilda Kennedy, founder and president of AmPac Business Capital, and we're really excited about the opportunity to talk to you about the Commercial Down Payment Assistance Program. As you know, this webinar is being recorded, and we're planning to share this webinar with WBEC. We've already talked to Dr. Williamson and Tara about that and making sure that it's available. We'll also be sharing the PowerPoint slides so that you have access to those after the presentation. And you have on the call with us Janine Warren, who's the Senior Vice President, Business Development Officer with AmPac, and Janine Peltier, who's a credit analyst and business development officer trainee. We'll be following up with you, answering any questions you have about the presentation. We'd like to ask that you would use the Q&A functions on the screen to ask any questions that you have as we go through the presentation. The chat feature you can use, but it's better for answering your questions, getting your questions answered if you use the Q&A feature. Again, we're so delighted to have you. We think that from the presentation yesterday and all of the questions that we got, we made some updates to the presentation to make sure that your questions get answered. But we, again, are really pleased to have you, and we're going to get started with the presentation. That, again, is being recorded for your benefit. So, again, today's agenda, we've already talked about the webinar rules and the Q&A features on the webinar. I'm going to tell you a little bit more about AmPac Business Capital and our ladder climbing loan programs is what we describe them as. We're going to do a deep dive about the SBA 504 loan program, and we're going to share some examples about women business owners that we've been able to fund and how we've been able to do that and the benefits for them in utilizing this program. And then we're going to give you some background on why we created the Commercial Down Payment Assistance Program so that we can better serve small businesses, especially women and people of color. We'll review some of the numbers on the historical track record of the SBA 504 loan program as it relates to Black, Hispanic, and women-owned businesses. And then we'll talk more about the Commercial Down Payment Assistance Program, how it works, and then we'll take you through a deal structure example on how it works and compare that to conventional lending. And then we'll share our contact information. Again, please use the chat feature. We definitely want your, not the chat feature. See, I messed that up. Use the Q&A feature, and Janine Warren will be responding to those questions. We'll be monitoring that to make sure that we can get your questions answered. With that, let me tell you about our who, what, where, and why we exist as AmPac Business Capital. We are a 501c3 mission-based lender, and we're authorized by the U.S. Department of Treasury and the U.S. Small Business Administration to administer loan programs as a nonprofit organization to do transactions, loan transactions. We do not have deposit relationships. And our designation for the Small Business Administration is a certified development company. We're also an SBA microlender, and we're also a participant in the SBA 7A Community Advantage Program, and we'll tell you more about that. And with the Department of Treasury, we're a Community Development Financial Institution, or CDFI. And certainly during the pandemic, you probably heard more than you ever knew about the SBA program because of PPP lending, and about community development financial institutions, or CDFIs, who were so active also with PPP and other programs to really help businesses through this difficult time. What we do, we finance and foster business success at all stages of growth. We partner with banks, but we do direct lending as well, where we get funds from banks because they can't do or don't do lower dollar loans or loans that are a little bit more challenging and don't fit into their credit box. They provide funds to organizations like us as a CDFI and mission-based lender so that we can get those funds to those small businesses that need it most and graduate small businesses up the ladder to strong banking relationships in the future. Where do we serve? We serve the state of California with our direct lending programs, but we also have partnerships throughout the nation. So we know that there are some WeBank members in Nevada and Oregon, Washington, Arizona, all of these Western states. We definitely can assist you because we do best fit matchmaking to assist businesses in getting access to capital and access to partners who can assist them in growing. And why we exist to uplift communities, strengthen families, and advance entrepreneurial dreams. And we do that with businesses from cradle, from startup to legacy, as they're planning their exit and thinking about other ways to grow to plan their legacy. So now I'm going to talk about our ladder climbing loan programs with all of our designations in partnership with Treasury and SBA. We help businesses with government-backed and private loans for growing their business from $5,000 for the business that's getting started with a microloan to greater than $30 million for businesses that are buying their commercial real estate or buying equipment. Again, thinking about cradle to legacy and planning their exit as they buy their building. And we'll be spending more time on the building portion today. For the SBA loans, again, equipment, building equipment, we've done over $500 million in loans to small businesses in these programs. And they include direct loans for working capital, inventory, business acquisitions through those, through our CDFI and through our community advantage lending. Where we really help small businesses is best fit lending partners and loans for businesses so that if we can't do it, or if our programs limit us to doing only a portion, we can help small business owners find best fit lending partners to help them to grow and thrive by understanding their industry, by understanding a little bit of their credit and financial history. We have a lot of relationships with banks, non-bank lenders, credit unions, to really help a small business get to the resources that they need. We also do ongoing training programs for startup and early start businesses to address pain points that can help the business to scale, and have launched and are launching a new entrepreneur ecosystem, bringing multiple resources under one roof to make sure that we can really serve holistically the small business owners. And we partner with a number of organizations to help business clients propel their growth. As one client says, we make business dreams come true. And so part of our vision is to advance entrepreneurial dreams. So about the 504 program, where we're spend much of our time, this program finances and refinances buildings, equipment that can include property improvements and ground up construction. And it's for owner occupied facilities where 50% minimum owner occupancy for the small business. The refinance of owner occupied buildings and equipment is also eligible in this program. And this program is a public-private partnership. It's a bank or other financial institution or non-bank lender or credit union. the SBA and the business owner are in this relationship to help the business get fixed asset capital that's as little as 10% down. There's an additional 5% if the business is a startup, but that is allowed. Startups can use this program, or businesses that are special purpose, um, hotels, car washes, assisted living facilities. Those are considered special purpose businesses. We do up to 90% financing and refinancing of equipment and real estate. And for refinancing, it's based on the appraised value of the real estate. And with refinancing, we can also help a business owner by providing cash out. So as long as we have 85% loan to value on the refinance, we can provide cash out up to 20% of the appraised value. And we think this program, the refinance, is going to really help small businesses in the recovery area to be able to tap into that equity in their commercial real estate and be able to continue to grow their business where PPP may have left off, or idle of the economic injury disaster loan has left off. There is no cap on the total project cost amount. However, the SBA 504 loan goes up to $5 million on a typical transaction, and it's on the SBA portion of the deal. Remember, I talked about a public-private partnership. So in this public-private partnership, the bank does up to 50% of the loan amount. SBA will do up to 40%. We can't go over 40%, and up to that. In that 40%, we can't exceed $5 million on a typical deal. So not more than 40% of the project cost. Multiple SBA loans are available to a small business owner up to an aggregate of $5 million. But if that small business is a manufacturer, they can do multiple SBA loans. Today, there is no cap. Up to $5.5 million on each project. The SBA is really trying to encourage manufacturers in the US to be able to access low-cost capital to grow so that we can have makers in the United States. So that's really important to the federal government and to this program. And then SBA also encourages green, encourages businesses to consider ways to create energy units or reduce energy units. And as a benefit of that, they can also obtain multiple SBA loans up to $5.5 million on the second trust deed, no cap on how large the project can be. And for those that go green, the project goes up to an aggregate. They can have multiple loans up to an aggregate of $16.5 million. Again, an opportunity for us to encourage reducing greenhouse emissions and being responsible from an environmental perspective, and encouraging businesses with the opportunities for savings by adding solar panels or other energy reducing or energy creating units. What are the benefits for small business owners with the SBA 504 program? And to the right, that picture is a client who is signing loan docs that we worked with, who bought a $15.9 million manufacturing and distribution facility in Orange County to grow her business. So the business, the benefits is low down payment, so the business owner can preserve cash. And when I share the example of a comparison, you'll see some of that savings that's realized. And then fixed interest rates to plan cost over time. One thing that's happening in the state of California especially is people, landlords are increasing these lease rates and sometimes not giving a whole lot of notice. And so the business owner is stuck struggling to figure out how they're going to deal with this increase when maybe their margins are going down because they're still trying to recover from the pandemic. The program is also beneficial because it allows the small business owner to finance its fees into the loan rather than having to pay those out of pocket. So you get a 25 amortization on those fees, which certainly saves the small business owner in cost and allows them to preserve cash for working capital and adding new employees to grow the business. And then in considering renting versus ownership, really counting those costs over time, again, thinking about how the lease rates are changing and whether having a fixed monthly mortgage is going to be beneficial. And we certainly have seen the results of that. And then thinking about legacy planning and exit strategies, certainly owning your building. You can either choose to continue to own the building and lease it out, or you can have that as part of your legacy planning and selling it and using that income as part of your retirement as well. So many benefits to small business ownership of commercial real estate, and then also utilizing this program, the SBA 504 program, to do so. Wanted to tell you a little bit about a success story. And this is one of Janine's clients. So I'm going to ask her to talk a little bit about this client and how we were able to serve them with an SBA 504 program and the benefit. Janine?
Good morning. So yes, I helped this psychologist. She was making her first commercial purchase. She was operating out of 2 different locations and had the opportunity to buy a building, combine the 2 locations into one new place. She was facing rising rents at both, and now she can control the cost. So we closed on this purchase in February of 2020. So obviously, right after that, COVID hit. She was able to pivot and do some online therapy sessions, which helped her. The SBA provided some assistance during that time. But so she was able to do this. She was able to go in with 10%. Our banking partner provided 50% of the purchase price, and we provided 40%. And as I stated, only 10% down for herself. So now she's got something growing equity, and it's just been a great purchase for her.
Great. Thank you so much, Janine. And that's what this story really was, a really great story because, again, right before the pandemic, she was able to own. The federal government was really generous to small business borrowers in that they made 6 months of payments on their behalf with the adoption of the CARES Act. And if she would have remained in that lease space, she would have had to really work with that landlord to negotiate not having to pay that rent and then any accruals that happened. So it was a really good story, and she was really, really grateful. So now I'm going to talk a little bit about why we're doing this commercial down payment assistance program targeting women and people of color. We have been studying data from the Federal Reserve and also from the Survey of Consumer Finances. And the data has been consistent. It showed that there's a long-standing and substantial wealth disparity between families in different racial and ethnic groups. And little had changed since their last survey of 2016. And of course, this data would be exacerbated in the pandemic in 2020. So the typical white family has 8 times the wealth of the typical Black family and 5 times the wealth of the typical Hispanic family. In the 2019 survey, the numbers were striking. White families had the highest level of both median and mean family wealth, 188,000 and 983,000 respectively. This is nationwide data. Black and Hispanic families had considerably less wealth than white families. Black families' median and mean wealth is 15% less than that of white families at 24,000 and 142,000 respectively, and Hispanic families' median and mean wealth 36,000 versus and 165,000. So those were striking numbers. And we were thinking about, especially coming out of the pandemic, what greater impact could we make on some of the hardest hit communities as a result of the pandemic? So first we looked at those numbers. And then we looked at our own program and how our own program, the SBA 504 program, could be a solution to closing the wealth gap, targeting certain small business groups. So as I shared, the 504 loan program really seeks to level the playing field for small businesses as a whole. These businesses are job creators, and they're often competing against larger businesses. So by offering a lower down payment than conventional loans, and you'll see this in an example later, 10% versus 25 to 30%, for purchasing owner-occupied commercial real estate, small businesses can become owners versus renters. Why is that significant as I look at the backdrop of the wealth gap data? The benefit of real estate ownership means controlled costs to better plan growth. It means the ability to expand a facility without required landlord approvals or other impediments. It means the opportunity to build wealth, to create legacy, and to facilitate, as I shared before, succession planning and a healthy exit strategy for a small business owner. We then looked at the numbers, and it was striking to us what the numbers told us. So when we looked at total 504 loan approvals and how those loan approvals grew year over year from fiscal year 2016 to year to date 2021, we saw $1.1 billion in loans to $1.6 billion in loans. When we drill down, looking at the wealth gap numbers, we noted that Black-owned businesses obtaining SBA 504 loans fluctuated over this period from a high of only 4% of all loans in 2016 to a low in fiscal year 2018 and current year to date 2021 of only 1%. And over that reported period, on average, 2.1% of all 504 loans went to Black-owned businesses. And we contrasted that with the growth of Black-owned businesses over that period, and there was such a contrast. When we looked at the dollar volume, it was even more significant. $12.5 million in 2018 in lending to Black-owned businesses in this program. And the high was 2016, $40.7 million. When we looked at Hispanic-owned businesses, there was a high 9% of all loans funded in the current fiscal year of 2021, which was encouraging. We're not at the end of that fiscal year. But the low was fairly consistent at 6% over all loan periods that we looked at, especially 2016, 17, and 18. The dollar amount of the loan volume ranged from 62 million in 2018, and the high was $152 million. Thinking about the the total amount 1 billion to 1.6 billion. Then we looked at the numbers for women. Women-owned businesses where 50% or more of the ownership as a woman-owned business. We also looked at that where the woman was an owner but was less than 50%, and we'll talk about those numbers. So in that same period, fiscal year 2016, year-to-date 2021, women business owners in obtaining 504 loans range from a low in 2021 of about 8% to a range of 10 to 12% was fairly consistent. And the dollar amount ranged from the fiscal year 2017 of 104 million that to the high in 2017 and 2019 of 137 million. So in terms of dollar amount, 104 million was the low, 137 million was the high. When we looked at women-owned businesses where their ownership is less than 50%, in 2017, and we're not sure what this aberration is in the reporting, they total only 1% of the loans made in terms of 504. But all other years we looked at, the range fluctuated between 18 to 21% of the loans that were made to women-owned businesses that were under 50% in ownership, and the high dollar amount was $346 million. So we determined that we wanted to attack this issue of the number of loans getting to 504, the number of 504 loans getting to Black, Latino, and women-owned businesses to address the wealth gap. And thus, we created the Commercial Down Payment Assistance Program. So in this program, our assumption, our hypothesis is that part of the barrier to entry to getting access to this 504 program, although the down payment is low as 10%, it's still a big nut to crack for some business owners who don't have wealth as part of their background. So we are providing up to 5% of the minimum down payment for the SBA 504 loan program. And so whether that down payment is 10% or 15% as special purpose, we're going to provide 5% of that minimum down payment. And we're going to provide it in the form of a low-cost loan, and that will be deferred for the first 12 months. The interest rate on that loan will be fixed at 5%, and the repayment will be over 5 years, but with a 10-year amortization to make it easier for the small business owner to be able to make that payment. And we will consider a refinance of that loan in 5 years. And we know we're suspecting that the property will have appreciated and it will be easier to refinance that loan for the small business owner. There will be no additional collateral for this down payment assistance, and the down payment may also be used for liquidity replacement if the small business owner does the 10% down, but they need that liquidity for continuing to grow their business. And it will be underwritten consistent with the SBA 504 loan program so that we can get the dollars to the small business owner consistent with getting the loan approved for the 504 loan. So how will this work? In this example, and we shared this with some impact investors who it really resonated with this down payment assistance, which is why we're so excited that we can offer the program. So in this example, the small business owner is looking at a property purchase of $2 million. And in the state of California, we looked at, on average, what might we expect for the cost of a property. And we just went through purchasing our building, AmPac, and I can tell you it is quite a journey. We couldn't take advantage of the SBA 504 program because we're a nonprofit and the program is only for for-profits. So I absolutely understand coming up with the down payment and then going through the whole process of ownership. So this property, $2 million. In this example, I'm sharing with you the SBA 504 program and what the down payment assistance program would look like and what the monthly payment would look like for that down payment assistance beginning in month 13. So, and I'm comparing this to if the business owner was seeking to do a loan conventionally, where the down payment requirement was 25%. So in the middle column, the project amount is $2 million. The down payment requirement is $200,000. And so the bank would have a first trust deed of $1 million, and the SBA would have a first trust deed of $800,000. This gives you a little color on the public-private partnership and how we split the loan. Based on what we're seeing in the market today, if the bank interest rate is 3.95%, and again, that depends on the financial institution, whether it's a bank, non-bank lender, or credit union. And if you don't have those banking relationships, we always recommend that you start with your bank. But if you don't have that relationship, we can certainly help you find the best fit matchmaking for your business, for your industry, for your financial history, and even for any credit considerations that we might have to look at. So based on the monthly payment, the SBA 25-year fixed rate today is 2.86%. So looking at both of those payments, the payment would be $9,050. That's an estimate. If this loan was done conventionally with a 25% down payment, the down payment would be $500,000 and a 25-year. Maybe you can get a similar interest rate with SBA. So I said a 2.86. We are typically, I tell you today, what we're seeing is right around 3%. I just saw one conventional at 2.99%, and they're doing that at 15 years. But this assumes a 25-year amortization with a monthly payment on conventional because you've done a larger down payment of $7,000. Where I want to compare with the down payment assistance, you would receive $100,000 in down payment assistance through this program, and the monthly payment for that down payment assistance beginning in month 13 would be right around $1,000, a little over $1,000 with a 10-year amortization. So the SBA 504 program, if we think about your total out-of-pocket expenses, if you use the down payment assistance program, would be $126,620. What does that include? That includes $100,000 for down payment because you're receiving the down payment assistance loan. If you didn't receive the down payment assistance loan, you'd be responsible for $200,000 down. But with the down payment assistance and your out-of-pocket expenses for title, escrow, appraisal, environmental, all of those are a requirement with any SBA loan. Your total out-of-pocket would be $126,620 estimated. And the monthly payment with the down payment assistance loan plus your monthly payment on the first and second trust deed, right around $10,000. For out-of-pocket expenses for the conventional loan, because you had to do $500,000, your out-of-pocket cost would be $513,500, but your total monthly payment would be $7,000. So we created the program again because the wealth gap issues and being able to help small businesses preserve cash. Your traditional SBA 504 program, if you didn't receive down payment assistance, is still available to you. And even if you compare the SBA 504 and conventional, it's still a much better program, $200,000 down versus $500,000 down in this example. So I am sure we have been answering some questions if there's been any. And if there are any questions that you might have that you want to put in the Q&A, we're happy to take any of those questions. Janine Warren or Janine Peltier, are there any other comments or clarity you think we should provide?
I don't see any questions. So I think just the difference in what's important. Do you want to retain the cash in your pocket for your working capital or have the lower monthly payment? Between the difference between conventional and using the SBA and the down payment assistance. So we are definitely seeing borrowers who still have plenty of liquidity wanting to select the 504 to keep that cash in their pocket. If anything, COVID has taught us that lesson.
Exactly. I was going to say the same thing, Janine, where we have seen so much, so many lessons learned about cash is king and having access to your liquidity, really, really critical. But as a business owner, really wrestling with that decision. Is it better for me to keep my cash, or is for the long haul, is it better for me to have a lower monthly payment? We believe that the 504 program at least gives you another option for you to consider. And for those who don't have that larger down payment, it really gives you the opportunity to level the playing field and get access to a program to allow you to be able to own your commercial real estate, to create that stability, to preserve cash, and again, to think about your legacy planning and exit strategy. So as I mentioned earlier, we recorded the presentation so that we can share that presentation with WBEC. We'll have it also on our website, but more importantly, we'll be available to answer your questions and to be a resource for you if you have any needs as it relates to capital and you just want to run something past a team to get some insight on where you should go or what you should be doing. We did a survey in the registration process, and many of the small business owners, WBEC members, mentioned that they were interested in purchasing their building. So we'd love to be able to help you with that. Several also mentioned that they had some working capital needs and they needed lines of credit. We can also assist you with that. Depending on the working capital that you need, we can do that directly through our programs, or again, with our commitment to best fit matchmaking, we can also help you get connected to a bank or other financial institution who can assist you where we might not be able to, but we have so many partners. And as a mission-based nonprofit lender, our simple goal is to make sure that you can, that we advance your entrepreneurial dream and get you the financing that you need to be successful. So we're happy to be that kind of resource partner for you. Again, thank you so much for being on. Hilda Kennedy with AmPac Business Capital, along with Janine Warren and Janine Peltier. And we look forward to serving you. And again, thank you so much for attending the webinar.